the PSL luxury trading entry rules. There are 3 levels. At level 1, we have 1 entry. At level 2, we have 2 entries, and at level 3, we have 3 entries. The take profit for all entries is from level 1 to 1000 pips take profit projection. So when we have a stakeholder who comes in with $200, that's for the stake, and $80, that's for the enrollment for professional training for those who will be taking the trades for them, we are able to create 3 different accounts, and 3 different accounts. Each account is risking only $30. So we fund each account with $30 and then attach a tag to each account trading rule. So an account that is trading only entry 1 will only watch for level 1 entries. An account that is trading only entry 2 will only watch for level 2 entries. An account that is trading only level 3 will only watch for level 3 entries. So altogether, the funds that will be put into the accounts instantly will be $90. That's $30 for each account. Now, the maximum risk from entry 1 to the stop loss is $20. The same applies to all of the 3 accounts. So for account 1 trading only level 1, the stop loss from entry level at level 1 to the stop loss is 20 pips. The same thing applies to double entries at account 2 taking entries from level 2, okay, with double entries that is using the double of the lot size, okay, which is double of the minimum lot size. That is going to mean that the 10 pips stop loss multiplied by 2 makes the risk equal to $20 out of the $30 fund in the account. And then level 3, where the stop loss is only 50 pips, okay, so we have 50 pips, 100 pips, and 200 pips for the 3 accounts. So the third account trading only level 3 with triple of the loss size, or the triple of the minimum loss size, will be risking also, that is $15. Okay, so $15 risk for account 3 plus $20 risk for account 2 plus $20 risk for account 3. That is $55 total. So out of the $90 funded, $55 is risked for every trade setup. So now, not all setups mean all accounts will trade at the same time. So the accounts are placed to watch for if their level is activated, and they take only the entry at their level and ignore the other entries at the other levels. So which means that most trades will be happening in account 1, okay, while account 2 will be trading only when the market comes to its level. Okay, and account 3 will be trading only when the market gets to its level. So account 1 may be the most active of all accounts. Now, why do we do this? This allows us to optimize the returns per week. In other words, what is generated from each account is what is paid out, okay, in the agreed percentage. But now we have decided to accelerate the payout so that we give the account holders the opportunity to see their liquidity, because the market is very liquid. Alright, so instead of us waiting for the full moon before we pay out, any payout that has been secured through the week's trading will also be announced as cleared. So it can then accumulate until before the month ends. If all 5 months payout are cleared within the first month, then all 5 month payout will be paid at once, which means after 5 payouts, the account holder is expected to do what? Renew. Alright, so renew the stake. So if the stake cost $200, then it has been paid out within the first month, it means that the stake will have to be renewed by the account holder. Okay, so now how this works very well for us is by optimizing the trading done with the 3 accounts set up for each stakeholder. That way, in week 1, as the setups come, when the profit is earned, minimum profit of course per week is $100. So which means that if the goal is achieved per week, it is definite that the clearing for the first month is already covered in the first week's income. Okay, then the profit can exceed $100 because of the scaling plan done, where 3 accounts are set out for trading for 1 stakeholder and 1 stake. So this is amplifying the potential reward, not increasing the reward percentage, but amplifying it so that there is every guarantee that the payout is there every week. And this is what separates the PSL luxury trading in the casual P1 community from every other trading system. So PSL does not give you any projection that is not realistic, so there is no hype. And then the report is transparent, which means we don't hold your payout because we want you to see us as giving to our word. So because we promised 20%, that means you must wait for the end of the month to receive your 20%. No. If we achieve 20% before the month end, we are going to announce it that your payout for the month has been cleared. Even if the clearing report comes in the first week, we are going to announce it that your payout for the month has been cleared. So it is up to you to request for the payout for the month, okay? Because any payout you request is logged in your timesheet of payout. That is to say, if you are expecting payout for the end of the month and you get it earlier, it will be settled as a payout for that month. It has come earlier. So rather than waiting until the end of the month, you can actually get your payout earlier, even in the first week, because the market is not the same every week. So whenever the payouts are coming in any week, we announce it so that you can quickly get your liquidity, okay, and then plan your equity for the next month or next couple of months. It allows you to plan in advance, and we don't hold it. So once it is cleared, you are ready to request for withdrawal. All right, so we cannot automate it without your request, but we announce it so that you are aware that your payout is ready. So there is no point then staying out and waiting for someone else to tell you that this is going to pay you. No, it is about you coming in, because if the ordinary individual trader cannot trade without taking any financial risk, why will any system promise you to be involved in the market without any risk to you? That is unfair to the traders, because as an individual trader, you realize that every capital you're exposed to the market is exposed to risk of potential loss. Okay, now you coming in as a stakeholder should also be part of that worry that there is possibility of loss. You are not exempted just because you are a stakeholder. Okay, so you don't need to wait for a system to guarantee your profit before you come in. Trust the system's approach, which in our case, we are using the Power 40 scientific trading method, which means if this is what has enabled us to earn, okay, and then we have the $100 seed 5 rules that we apply, which means we are sure that we can keep up and keep on earning, okay, through our program. If you want to come in, you don't need flashy results for you to come in. You don't need to have that mentality that you will not take any risk. Come in like a trader. The difference is that you will not be trading yourself, okay? Because you are helping us create professional job for those who will be trading. The difference for them also is that they will not be taking the risk themselves, because somebody like you has already funded the stake. So it now becomes mutual benefit. And the benefit for us is that our ecosystem is going to thrive, because stakeholders like you will be benefiting, professionals who are trained to work for you will also be benefiting, and our hubs will be expanded. That is the what separates us from all others alternative out there. Okay, so you want to become a stakeholder, either DIY or DFY. Think about the risk. That is what I am mentioning. Your capital is classified, okay, into risk capital, and each account is funded with the exact risk capital. To make sure that the risk is a kind of mitigated through diversification, okay, of portfolio, we create 3 accounts, and these 3 accounts are managed by 3 individuals, okay. The reason for that is so that it can enable us to optimize the payout for that account. It's like an accelerated process. So instead of waiting for 1 full month, when we spread it, we allow the opportunity to come quicker in returns, so that we can announce payout qualification earlier. Then you can now decide, because what you have funded is your money you took from somewhere and you need to put it back into somewhere, right? So if your payout came earlier, you could quickly use that fund and do what you wanted to do, and then you renew your stake with us. Okay, so ordinarily, if we didn't pay out after 5 successive payouts, okay, if you've already received the one that balances your return on capital, that is your break even, as you funded $200, you've already got $200, the next 5 become your profit, then you have to renew, okay, by staking again, which means you made 100% return on capital in a year. So now, rather than keeping you waiting for the year, you start paying out earlier so that you can rebalance your capital and then renew. Okay, so during renewal, it is benefiting us as well, because we're not making our profits earlier than waiting until the end of the year. So this is why we are announcing this. It is also for transparency, so that you know how we actually segment the accounts that are traded. Okay, so each account is funded with a risk capital of $30. Your stake is $200, but we have separated $90, okay, from your $200. We still have $110 reserved because of the possibility of risk. So those capital we call risk capital are not there for nothing. They are there because we can lose them. And when we lose them, that is why we have the backup plan. So we did not risk everything, and we did not increase the leverage per trade. So we are sticking with the minimum lot size for the account levels. So account trading level 1 is trading with the minimum lot size, only 1 entry. Account trading level 2 is trading with the minimum lot size, 1 entry with double of the lot size. Okay, account trading level 3 is trading with what? The same minimum lot size, but triple of the lot size. Why are we increasing it? Because the closer they are to the stop loss, the safer it is for us when increasing the risk on that trade. Okay, and at the same time, that is the higher the reward potential based on the distance between the entry level has been increased, okay, from the exit target profit price. That means that if level 2 activates, we are going to make more profit than we would have made from level 1. Okay, and we are making double profits also than level 1. So first of all, level 2 will give us level 1's profit times 2 plus an extra. Level 3 will give us level 1 entry profit times 3 plus an extra. So it is an advantage, but we cannot guarantee that all 3 accounts will enter. So it means the minimum risk is still $30, okay, for any of the accounts that activates. While even at that, $30 is not all expended if the market compromises our entry. What happens is entry 1 will still have $10 balance, account 1 will still have $10 balance from the $30 risk, account 2 will still have $10 balance from the $30 risk, and account 3 will still have $15 balance from the $30 risk. So you see, the risk is evenly spread, and at the same time there is capital retention even when risk is tolerated, because we have a fixed stop loss that is not altered, and that stop loss is the same for all three levels. Okay, yet all accounts do not bear the risk at the same time because they do not enter the market at the same time. They only enter when their entry level is justified, and only once per day. So when we say trade once per day, we follow the rules to the letter through the account segregation and segmentation too, through the levels. So the level segment and the fund spread through the accounts becomes segregation. Okay, and then the capital is preserved because there is a reserve capital while we are trading. And then when the profit comes in, you see now the risk is balanced. So we announce that we now have potential payout for month 1. If we solve that in week 1, if we can achieve it 2 or 3 times in week 1, it means that we can exceed the projection for payout, which means that we can pay out in month 1. We can succeed to pay out all of the payout for the year because we could achieve that result. And since the market is volatile, all weeks are not the same. Okay, so there could be a week that there was no entry at all because the market did not meet our entry conditions, since we stick to our trading method, which is the Port Harcourt scientific trading method. So if the entry did not meet, the market did not meet our entry rules, we will not enter. That is why the week when the market plays according to our rule, we announce the payout qualification, so that the weeks when the market does not play according to our rules, we know we have already covered up through the week that there was higher volatility that played into our rules. This way, we are taking advantage of the fluid nature of the market. Market is not fixed, it's not static. The market is a flux. Okay, and we play into that change that happens. We are constantly adapting and adjusting, okay, to suit the market's new events that are responsible for the price fluctuation. So you want to be part of us, then you don't need to think that we are swallowing the risk for you. We are encouraging you to take the risk through our expertise. So our hands are on deck while your capital should be on deck. Okay, then be aware of the risk. Now, it is through our announcement that you know that our risk is actually bringing in the required reward. Okay, then whenever there is no payout, we can announce to that we did not qualify for payout. Okay, for any of the months, we wait for the next week. So within 1 month, we can achieve the payout projection. That accelerates not only your own payout but our own profit, because if we succeed to pay out early, you can renew more than 3 or 4 times in the same year, while we still have a full year stretch, which means we can make profit from the renewal just as we expected to make in 1 year. We can make it in 2 or 3 months, okay, repeatedly in the year. So this is exactly what we want, and that is why we want you to understand how PSL luxury trading works. It is really luxury trading as mentioned, and then it is following the Port Harcourt scientific trading method. So if you now understand this, then you should be thinking about securing your first stake in our cash swap, either DIY or DFY stakeholders community. So choose where you want to belong, either to do it yourself or to let us do it for you. The options are open and are yours. The risk to start is the same, $280. $200 for your stake, $80 to fund the training of the professionals who will work for you. Okay, we train them to master our 5 rules, and we put them in our hubs to work for you from the hubs. So the more stakeholders we get, the more hubs we are able to open, the more jobs we are creating, the more income we are helping ordinary people to earn that is steady and stable. Okay, and the more we are helping build lives through our 4 core values. This is what sets PSL luxury lifestyle brand apart. We are building PSL co-work network. So we believe in teamwork, collaborative effort, okay, and synergy. This is where the saying comes true: money na water. Yes, this is where it comes true when we work together to earn more than our individual capacity can actually make possible. So if you want to put this to test, why not come into the market today with your own capital and try to do it yourself? You see, you cannot multiply yourself in 3 places at once, and you always have the emotional problem of dealing with the market's fluctuation. So you will not even be able to withstand the pressure of you doing it by yourself. Now, when we shield you from that emotional torture and swings by bringing in people who are trained to do it for you without emotional attachment, because it is not their fund, so they have to play by the rules. When emotions come in, your logic stops to work, so you don't play by the rules. That is what makes a lot of people not to succeed in the market, and we are solving that problem by bringing in real people with training and providing them the capital, still better than the funded accounts or the prop firm platforms out there. You cannot find any that solves this problem better than we do. So if you were choosing any platform to work with, choose PSL, luxury lifestyle brand, choose PSL, co-work network. Okay, welcome back. I am Francis Bestman Isugu, the founder of the Port Harcourt Scientific Trading School. So now we are coming to Monday and want to look at what happened on Monday from the first time we made a call to take the entry. So the time was 12:38 a.m. and we just said our new week entry for today is a continuation of the sell of Friday. Sell limit price was given as 4320, take profit was 4183, and stop loss was 4340. So this was the chart. screenshot to show that we have called the entry, projecting a break below, okay, 4320. So that was when the price was at 4330. Then next, what happened? Okay, so price approached 4320. We are waiting for an entry. So we said our higher level entry for today is a pre-deal break entry projection entry. So we now give a higher price at 4324.43. Take profit was 4273.43. Stop loss was 4334.43. We now give the condition saying we should place the entry as soon as price breaks below 4324.43 after 1 p.m. Then coming here, price was still above, so the break below has not happened, and we have identified a new case or a new level above 4324 where we're going to call our next entry. So that was what happened next. We said our highest level entry for today is a buy 3 CNI pre-DL BEP entry, that is break entry projection entry. Sell limit will be 4333.43. Take profit will be 4273.43, and stop loss will be 4339.43. Condition, we say place the entry as soon as price breaks above 4334.43, then breaks back below 4334.43 after 1:30 p.m. Now let's see again. Next, the price still going above 4337, and we called again saying our highest level entry is still the same thing. Condition, place the entry as given before. Condition about to be met, so watch for entry 3, use 0.03. 0.03 means that every 1,000 pips will give us $300 profit. So let's see what happened next. So this was the chart. Now price coming close to our entry level given. Then we said wait for the last condition. We say part condition for entry level 3 has been met. Our highest entry level was repeated again. So conditions about to be met, watch for entry 3, use 0.03. Now let's see what happened next. So at this point we can see the condition has been met. So let's see. We now stated their condition now met at 2 p.m. Our highest level entry for today is a buy 3 CNI pre-DL break entry projection entry. So now our take profit was adjusted to 4173. Haven't seen the confirmation, and then we are now to watch the outcome, and this was the outcome. Our entry has activated and the price has begun moving. So what did we say? Watch your open trade and reset lot size by modifying trade. Okay, now what followed next is today, and today is Wednesday. We are showing the result of the trade. We say sell move now complete, price touches 4173. So let's look at that. You can see that price touch 4173 as projected. Another 100% accuracy. So this was a call I sent out using the Power 40 scientific trading method. So now let's look at our chart and see the current situation of price in the market. Okay, so this is today as I'm talking right now is Wednesday the 10th of June. Okay, so the call started from Monday the 8th of June, then Tuesday. So this was Monday the 8th of June. Yeah, this was Monday the 8th of June. This was the entry level, and then this is where the break of the entry level and confirmation started from. So 4333, that was the call. Now how did it end? On Tuesday the market came back, the market rather came to 4313 and bounced up. That was yesterday, and got to 4342. Then later on got to 4351 same day, and afterwards reaching 4364, the market returned down. So our entry was where 4333. So coming down to close above 4333, this is the sell level. Okay, you see all the levels are marked here for Tuesday, and then what happened? The price came down. So Tuesday price got to 4236, all the way from 4333, that is 1000 pips already, but our projection was for 4173. So today being Wednesday, the price started and moved down, reached 4173, exactly the price that I called, exactly the price. Okay, and at that point we are sure our trade has closed successfully. So what happens next is today. Okay, so what is the call for today? That is where we are currently. Now for today we have called a sell, okay, from 4203, and we are projecting the price to get down to 4103. So far, how has the price moved? The price has gone down to, let's look at that, 4130. So it's still yet to get to 4103. 4103 is the move from entry level. This is our entry level 2. We have our entry level 1 at 4193. So from 4193, the price is to get to 4093. Okay, then we still have the price going down to 4074. So all the levels where the price is to get down to 4074. Now we have another higher entry level at 4208. Now the move that has happened already has been, first of all, a break of the deviation limit, return to test entry level 1 before the return back to break. Okay, first of all to break in and to break out for the entry here. Okay, that's a 9 here, 9.3 here. Okay, before this entry the market went up rather to entry level 2, and also went up to entry level 3. So all three entry levels saw their activation on this downward move, and it was just like a compensation for what happened yesterday. So yesterday the entries that we are taking were dismantled when the price pumped up, okay, from all the way 26 reaching 4363. Even I had called the short. Let's look at that so that we can confirm that we are actually trading as price develops in time. So I had called the short. Let's look at the short for yesterday that was called. Okay, first of all, this is the short for today that was called. So time for our first sell for the day. Use 0.01, sell limit 4203, take profit 4103, stop loss 4223. Okay, so that's the short that was called. Now let's go back to yesterday. Okay, so this was yesterday. You can see yesterday the short that was called is to set up a sell limit at 4341. Okay, and this was the chart 4341. That was the call that was sent out yesterday, and the take profit was 4173. Okay, so this projection was what was traded down to the end of yesterday. You can see that, right? So take profit 4173. Here I did over 170. Okay, 170 pips. So the 1700 pips of projection, and that was it. So the next thing I said, that the price was anticipated to pump up even before it pumped up. Okay, this was when the market was showing that it was going to pump up. Okay, so I extended the level from 4.1 to 4.7. That is why it is marked here. Okay, then I sent the call. I said step up price to new level now as given below. So what's the new level? 4.347. You can see that, right? Anticipating the move before it happened. Take profit remains 4.173, while stop loss is 4.350. So what happened? This is when the price has pumped up. Okay, it pumped up to where? 4.364, and then you see I'm still pointing at the entry level as 4.347. So at this point, taking that entry from 4.347 while the candle that pumped up was still open would activate the entry. You see that, right? So level beating, entry confirmed. That is what I stated there. Level beating, entry confirmed. Place the limit order now. So placing that limit order, automatically see the outcome. Look at that. Automatically, the outcome was a massive drop down from all the way 4.343 to 4.321. Okay, and from this point, I projected that if the price would close above 4.323, then there will be a buy. Okay, but did the price break above 4.323? That was the buy limit. No, the market never broke again 4.323. That was yesterday. Okay, so let's look at that. So this was the move when it started, and we are at the level. These are the levels of 4.323. So this is the level here. Okay, these are sequences. You see, so the market came, broke below 4.323. This was the candle, could not break below 4.323. So the buy was not justified. Okay, so which means that the market showed that it was not going to buy again. This move was the end of the sell move. I mean, the attempt of rooting out the sellers. So my traders who took the entry from 4.347 will be having their sell to the take profit, while the buy will not come in. So look at that, how it happened. Take profit was 4.173. This is 4.237. The day ended and today started. The market got to 4.172. So showing you that it beat the 4.173 projection. But what happened, to be exact, the market turned from, look at that, 4.173. You see that is where the market bounced up from. So this is accuracy with mathematical precision that no other trading school has. Accuracy with mathematical precision that no other trading school has. Only the Port Harcourt Scientific Trading School. So I have been showing this back to back to show you how I use the Port Harcourt Scientific Trading method taught in the Port Harcourt Scientific Trading School to do accurate projection of the global market, global price of gold, that no other school has been able to do during this period of high volatility or extreme volatility in gold, which is XAUUSD. Okay, so all other trading schools need to submit to the Port Harcourt Scientific Trading School, because in the scientific block we have what is called paradigmatic shift. That is when one theory is conquered by another, okay, or one school of thought overrides another school of thought with a superior proven method, okay, or scientific method. And in this case, what has been proven so far is that only the Port Harcourt Scientific Trading School has the accurate method for predicting the price of gold that can result in huge amount of profit for high risk takers, for conservative traders, and also for sophisticated traders. So every kind of traders, every kind of trading attitude can benefit from the Port Harcourt Scientific Trading method, okay, because from the moment the call has been given, all these lower levels can accommodate every other type of traders. Why my own students start from the top, okay, because using the Port Harcourt Scientific Trading method, we are able to anticipate the move before it begins and take the entry when everyone else is not seeing the entry. If you look back at the chart, you'll see that I called that entry when the candle was still green. Okay, let's look at that. You see when the candle was still green, when no one else is seeing that move. And look at all the levels marked on my chart. All the levels marked on my chart. What no one else has. All the levels that price will engage with before it even starts the engagement are marked on my chart. You want to look back and see that. You see, so I am anticipating where price should get to, and we enter again, and the price still gets there. How do you see that? Okay, and now we are taking the entry downwards before anyone else sees this move. While everyone else is following what the market is printing out, we are calling the market to where it should go. This kind of result, okay, beats what anyone can brag to have something better. Okay, no one can brag to have something better than what we have in the Port Harcourt Scientific Trading School. So for the interest of those who will be joining the $100 seed funding program, I have been showing you proof of consistency that we are not in the guesstimate business, okay, of guessing market prices. Okay, we are rather scientists in the market. We have spent the time to study, we spend the time to continue to study, to apply our studies, okay, into market projections. So if our projections can be this accurate every day, think about how much money you could be making just by being part of our program. Okay, does not mean that the up and down will not be there. So how do we handle up and down? This is what we can do. Since we have our risk portfolio that is segregated in 3 accounts, okay, we are playing with first account called account 1, and we are using the lot size of the minimum of 0.01 for a standard account. Then with our new affiliation with our financial institution as partner, okay, we are now providing a cent account that will become what? Our new account 1. So a cent account that will become our new account 1 is now provided, so that you can use, in place of 0.01, you use 0.25. 0.25 is the equivalent of 0.01, or we use 0.20. Okay, it is equivalent of what? 0.01 on standard account. So when you use this lot size, you are allowed to take this trade with a 200 pips. Okay, with a 200 pips. Now that 200 pips means that if the market intends to go to a higher level, it will take out the first practice account, okay, then allowing us to use our main account to enter at entry level 2, then our backup account to enter at entry level 3. That is to say, if the market does what it did here, remember that no one else had the levels up here. It is only those of us in the Port Harcourt Scientific Trading School that have these levels up here. So what are these levels? Let's look at them. This is the buy fib 10 times 10 times 5 arrow 1, and then which one is it? The sell SBL 10 times deviation limit. Okay, these are the 2 levels here. Now remember what the deviation limit represents. It means a level that once broken above and the market returns below, we will expect to buy in the direction of the initial break. Okay, this rule is only in the Port Harcourt Scientific Trading School, using the Port Harcourt Scientific Trading method, and it is a mathematical rule. So okay, so this is the final outcome of the trade call we had for today. Looking at the market dip to 4103 as projected, we can say that it was a successful trading day, just like the previous day. So this is a cumulative of 3,000 pips, and we are still looking forward to further dipping of price to 4075. So this is coming from the Port Harcourt Scientific Trading School, showing you the effectiveness of the Port Harcourt Scientific Trading method. So there has never been a better way to project the market, especially with the trading of gold, XAU USD, than using the scientific trading method of the Port Harcourt Scientific Trading School. So if you are still yet to enroll for the $100 seed funding program, then this is another call for you for this coming Friday. Send us your name, your email, your location and occupation on WhatsApp to 0903 428 4705. 0903 428 4705 to book your spots. And feel free to come along with your friends. See you there. Hello everyone, and welcome to this deeply personal destiny-shaping moments in the PSL Co-work Network series, where we don't just talk about opportunity, we live the stories of people who choose to seize it and transform their lives. I am Francis Bestman Isugu, lead founder and steward of PSL Luxury Lifestyle brand, the ecosystem built to deliver shelter with deferred luxury housing, professional clothing without financial humiliation, nutritional security that ends survival anxiety, and dignified income through training that pays from day one. If you are at a crossroads right now, staring at a decision that could redefine your financial future, your family's security, and your legacy, thank you for being here with me. Today, I share a real journey that captures exactly what many stakeholders are experiencing. I am at the crossroads to my destiny, building my empire of auto staking as a DFY PSL stakeholder on the CashWap community. This is not theory. This is one member's lived path, anonymized for privacy, but drawn straight from the numbers and emotions unfolding in CashWap A1 right now. They stood at the same fork most face. Keep playing small in traditional systems with high fees, slow payouts, and no real impact, or step boldly into DFY staking with PSL, where leverage, compounding, and community job creation turn ambition into empire. They chose DFY, guided optional, lower daily effort, algorithm-supported execution, and invested $40,000 total in the 6-month compounding payout plan that broke down to $28,760 for the first month's 144 funded stakes, maximum per stakeholder under current mechanics, plus the modest $80 per professional training cost, all managed seamlessly by PSL. No need to hire, train, or supervise. Our team handles everything. The result? In the very first month, their staking directly contributed to creating 322 professional jobs. Real people placed in trading, training, and hub operations, and in predictable payroll funded by the ecosystem's engine. From month 1, the monthly payout due was $5,880. Instead of withdrawing, they elected the auto-staking compounding option, allowing PSL to retain and reinvest that payout for 6 full months, compounding at the DFY structure's proven mechanics. That consistent retention grew their effective monthly payout from $5,880 to $13,099 by the end of the 6-month period. That is not magic. It is disciplined leverage applied to a transparent, values-aligned system. Then the payout cycle began. 5 cycles from the end of month 7 through the end of month 11. Over those 5 distributions, the net returns on the original $40,000 investment reached 85%. Turning the initial capital into approximately $65,000 in realized value. Plus, the ongoing compounding streams that continue beyond more. More importantly, those 144 professionals they trained and funded are now generating consistent value, paying monthly through their contributions rather than the stakeholder paying salaries out of pocket. PSL manages the entire chain, training via Power 40 method, placement in trading and hub activity, payroll stability. The stakeholder simply stakes DFY, compounds and watches impact, and income multiply. Let us pause and feel what this crossroads really means. Before PSL, this member was juggling gigs, watching platforms take 10 to 20% cuts, waiting weeks for delayed payments, and feeling the weight of precarity. No shelter queue priority, no styling support, no food security buffer, no predictable income. The pain was real. Doubt about tomorrow, anxiety over family needs, the quiet fear that ambition would never break through. Choosing DFY wasn't about avoiding work. It was about choosing velocity. It was saying, I want my time, my capital, and my contribution to compound, not erode. Navar Ravikant captured the principle perfectly. You are not going to get rich renting out your time. You must own equity, a piece of a business, to gain your financial freedom. In PSL, DFY staking gives you exactly that. Equity-like ownership in the ecosystem's growth engine, trading activity, arbitrage spreads, masterclass fees, hub operations. Without the solo grind, your stakes fund professionals who execute, their output compounds your returns, the 4 core values become accessible sooner. Compare this to traditional staking or investment platforms. High-fee mutual funds or retail crypto plays often deliver 5 to 15% annual returns after cuts and volatility, with zero job creation, zero community impact, zero tie to real departments delivering shelter, clothing, feeding, and income.
PSL's DFY auto-staking plan, by contrast, delivers 85% net over 11 months in this example, while directly creating 322 jobs from one stakeholder's entry. That is not just financial return, that is civilization-level leverage. One person's decision rippling into dignity for hundreds. Emotionally, the shift is profound. This member described the moment of choosing auto-staking retention as the day I stopped surviving and started building empire. No more watching payouts disappear into daily expenses. Instead, watching them grow while sleeping. No more isolation in decision-making. Instead, partnering with PSL's expert team and algorithm. The compounding wasn't just numbers on a dashboard. It was proof that dignity scales. More jobs funded, more families secured, more jobs possible down the line. Time plays a starring role here. The 6-month retention phase felt long in the moment, but it brought the velocity later. 5 payout cycles delivered the bulk of the 85% net return in just months 7 to 11. That is the power of patience in a leveraged system. Short-term discipline creates long-term freedom. Jim Rohn reminded us, we must all suffer one of two pains, the pain of discipline or the pain of regret. This stakeholder chose discipline, and regret is no longer part of their story. The empire extends beyond personal wealth. Those 144 professionals aren't abstract. They are real co-architects now earning, contributing, and assessing the 4 values themselves. The stakeholders' $40K became a flywheel, funding training, generating trading output, compounding returns, enabling more stakes, creating more jobs. This is how PSL scales, stakeholder by stakeholder, city by city, dignity by dignity. For anyone at their own crossroads, recognize the fork. One path is familiar, slow, high friction, limited impact. The other is DFY staking in cash swap A1, guided, compounding, job creating, values delivering. The numbers in this story are not outliers. They reflect what maximum staking with auto compounding can achieve when aligned with PSL's mechanics. Peter Thiel's definite optimism fits perfectly. Don't hope for a better future through vague effort. Build it with concrete plans. DFY is the blueprint. PSL provides the execution. You provide the stake. The result? From $40K to $65K plus in realized value, 322 jobs created, ongoing streams, and a legacy of contribution. This member's story is your mirror. If you are feeling the pull, the quiet voice saying, "This could be me," honor it. Calculate what waiting costs. Another 6 months of status quo or 6 months of compounding toward empire. As we close, let Naval anchor us again. Seek wealth, not money or status. Wealth is having assets that earn while you sleep. In PSL, DFY auto staking, your assets earn, professionals work, jobs multiply, and dignity spreads. Why you build the life you were meant for. My heartfelt call today. If this crossroads feels like yours, step forward. Explore DFY staking options in cash swap A1. Review the 6-month compounding plan. See how your stake can fund professionals and compound returns. Reach out via WhatsApp 0810-2427-303 or in the community. We are here to guide you through alignment. Your empire isn't waiting for permission.